Morning, I'm Maurice Crespi, Managing Partner of Schindler's Attorneys. Schindler's Attorneys is a co-founder of COBRA. COBRA is a pro bono initiative that we put together with IQ Business and Engage Business Turnaround. And the idea is to provide professional services on a pro bono basis to businesses in distress. That partnership has now grown to over 55 companies in a whole range of disciplines who've agreed to provide their services on a pro bono basis. We do so by various means. We hold these webinars. We have a website, cobra.org.za, where we have a knowledge base which deals with all the regulations, all the rules, everything's there. We're told that it is one of the most comprehensive, if not the most comprehensive in the country. We hold team meetings with you and your team, you and your staff, the directors, just any Q&As, just meet with us. We're here to help. As I said, part of what we do is we provide these knowledge webinars with various speakers. And today we're dealing with residential property, which is going to be very, very interesting. It's by Gil Sperling, who's the CEO of Flow, a pro-tech platform which is revolutionizing how people rent and live. Sperling started his career as an engineer and was one of 3 founding partners of Poppy Media, one of Africa's biggest ad tech and performance marketing companies. Poppy Media went on to be bought by French-based Global Communications Group, Publicis, and through his experience and expertise within the tech industry, he, together with co-founders of Flow, are revolutionizing the economics of rent with a shared value approach, bringing in behavioral economics to make the entire renting process more affordable, more transparent, and more seamless. I mentioned earlier that I am a property investor. Back in the day when there was a property boom, I went mad and I bought a whole lot of residential property. So this really, really sparks my interest. Gil, over to you. Thanks so much for being here, and thanks to the attendees. But before I hand over to you, let me introduce my other panelists, Renee Kopper from IQ Business, Emma Marseille from IQ Business, and Gary Barachovitz from Schindler's Attorneys. Over to you, and thanks again.
Thanks, Maurice, for that introduction. Glad to be here. So I'm going to jump straight into a presentation that's going to take you through the Flow offering, but more importantly, it's also going to pull through a study that we did via a survey to more than 80,000 of our tenants on the platform, that asked them, how has COVID-19 affected you and you paying your rent and your relationship with your landlord? And it all ties back to what it is that we're trying to do in our vision. So let me kick off with that. Cool, I hope you all see my screen, the presentation. So what is Flow? I think it's good that I introduce what it is that we're trying to do and what the platform is, to give you that context before I dive into some of the learnings that we've had. So Flow is a rental marketplace where landlords get access to profile tenants who are rewarded for great behavior. So what that really means is the vision here is us being able to unlock the tremendous value that we believe is trapped in the property industry. Why we believe so is because, first of all, I think we all know that, or perhaps we don't, but property is by far the most valuable asset class globally. And for us as people, it's obviously a basic housing need, and for tenants, it's generally about 30% of your income that goes to rent. And property is the least innovated on sector when it comes to technology, and that's why our mission here is to try and unlock that value and bring it back to landlords and tenants. And what we've built is a platform that allows tenants to through monthly engagements, they're able to pay the rent and check into the landlords and communicate with the landlords to buy certain products that are related to the rent, and they earn points and they go up different levels. And you know, for lack of a better analogy, we've built a vitality for the discovery, we have vitality for the property industry that ultimately creates a far more profitable business for the landlords and for the partners that offer the different products. So we went live with this product just over a year and a half ago, early last year, and we've already grown it to 87,000 tenants who use it every month, and generally rent between 5 to 40,000 Rand, with ages 21 to 35, which is what we call generation rent, which I'll get into in a minute, again important for the context. And so far, Flow tenants pay more on time with the Flow app, they retain for longer, and they're far higher yielding, which has been our objective of how to ultimately unlock value back to landlords and back to the tenants. So what is generation rent? It is a trend of people who are renting for longer. And it's generally within the millennial generation. That's why it's that ages 21 to 35, even up to 40. They all spend, when I say they, I mean me as well. And I think many of us spend more than 4 hours a day looking at our phone, doing social media or emails or communication like WhatsApp or whatever the utility may be. We use Snapchat and Instagram and not traditional portals to engage. The generation rent settle down for far later. They get married at a far later age because they value experiences and want to be far more transient, and therefore prefer having a lifestyle that is less committal, that is less settled down, and therefore invest in buying property later. The second reason, of course, although generation rent may aspire to buy property, they can't afford to, because over the last few decades, the inflation of property has outstripped the inflation of earnings. So people cannot afford to buy, but also it is a lifestyle choice. So in May, 1 or 2 months into COVID, we ran a survey to our base. We called the results the Flowfindings, which is becoming a quarterly report. The first issue has been in May, and we found some very, very interesting insights that I want to share with you. And you can also go into the full report. It's free to download. Just go to findings.flow.rent, and you can have a look at the complete report. And I think there are some super valuable insights, both for tenants and landlords or agents. And I just want to share three. I think I put in 4 of the findings of the total 7. And I'm going to dive into, again, post that, how it is that we're looking to solve some of these interesting findings. So first of all, what we found, the second finding, is that 78% of tenants' income has been affected by COVID-19. It also means that you'll see in the next finding that only 37% of tenants can afford to pay their rent fully. So the main question that we go on to try and answer is, how do people actually deal with this? How do both the tenants and the landlord deal with this situation? And we found that tenants have gone about looking for other financial assistance. We've got a breakdown in the report that they've actually applied for loans, that they've applied for insurances and subsidies, and that they are probably likely to if they haven't yet. And it also goes to break it down into different sectors of the market. And like I said earlier, the third finding is that although only 37% of tenants are actually able to afford in this time to pay their rent fully, tenants are definitely finding a lot more creative ways of paying for their rent and reaching out to either to savings that they may have, to loans from family and friends, or loans from financial institutions, which means that tenants are probably extending themselves more than they have before. Now, further down the line, what we went on to understand is the sentiment that a tenant has with their landlord. And we did that with something called an NPS score, which is a pretty standard statistical method of understanding a sentiment that you can then relate all sorts of important metrics to, for example, churn and future vacancy, right? So generally, if you have a low NPS score, it means that your customer, and we often like to think as tenants in this environment, and generally, broadly, tenants should be considered as customers and not just clinically tenants. And you'll understand why I say that in a minute. But with an NPS score, you can quickly tell whether your customer is going to churn or whether you're going to lose him. And obviously, we know as landlords and agents that it is very painful when we have vacancy. It's probably the most impactful characteristic that reduces the yield and the return on your property is when it's sitting vacant. And if you do have a good tenant, you obviously want to keep them for as long as you can. Now, we ran the NPS score during this time, and we found that generally there's a negative sentiment across the base. The negativity could come out, and you can see that just by this minus 9.6. You obviously want anything over and above the 0 without going into the detail. But the crux of it is that the sentiment was far lower, both because of the negativity that is happening broadly, but also we went and broke that down to try and understand, is it a sentiment that a tenant has to their landlord, and what are the details of that? Now, we found that conversations were had with tenants and landlords. So over 80% of tenants did approach their landlord to try and discuss how it is that they can afford to pay the rent. And we found that about 32% of landlords were forgiving. And in forgiving, I mean by either they deferred rental, or they reduced rental, or they allowed for a complete holiday of paying rent. And the other learning that we understood was that tenants don't realize that the landlord is also hard hit by the current situation, that the landlord has a bond to repay, that he's probably well geared, that he owes money that he has to pay back every month, and that he's also in a tight situation. And that the most important learning out of this whole findings was that it is a people game, and that conversations need to be had, and that usually through reason solutions were reached, right? And generally the tenant got to understand that the landlord is also hard hit, but any reprieve that the landlord received, either because of the interest rate going down or because of a loan repayment holiday from the bank, he would pass on to the tenant in general, is what we found. The last finding here before I move on, interestingly, was that it is that the smaller, what we call mom and pop landlords, those that own property or 2-5 properties versus the institutionals, were far more forgiving when it came to those conversations than the bigger institutional landlords. That's just a super interesting stat that I believe institutional landlords are overlooking when it comes to the health of their portfolio. So our main thesis is that tenant is about tenant engagement and loyalty. And also through these findings, we proved, you'll see it in the full report, we've proven that that NPS score goes up when there is a better engagement from the landlord to the tenant. And we found that through positive affirmation, through rewards, and by reward, I mean, thank you for paying your rent, here is a coffee. Right? I mean, the perceived value of that reward offers enough goodwill, which means there's enough loyalty, which means there's longer retention. And of course, I've oversimplified that example, but that is our finding and the thesis for which so far we have really promising or really empirical data of the results and how it is that it impacts the portfolio ultimately. The last little piece here is that there is a high correlation between engagement and risk, right? So to say everything that I've said in different words, we've statistically proven or empirically proven that the more positively engaged the landlord is with the tenant, the lower the risk of things like churn or vacancy or non-renewal or looking after the place or even collections has to do with it. So what is it specifically that we do via the platform to action these really important insights? So we've created an app for the tenants that is really underpinned by behavioral economics. Behavioral economics is a whole science that correlates it correlates numbers and finances and business to normal human behavior, which generally is irrational, meaning you make far more emotional decisions as a person than you do rational decisions or calculated decisions. And that's really what we work with. We work with the human psyche in their rental journey to try and increase their incentive to be better tenants. And there are three main behaviors that we focus on. One is paying your rent on time, two is looking after your place, and three is renewing your lease. If you crack those three, and there are of course others, but if you crack those three, you're generally on a good road to having a far more profitable investment as a landlord, right? And for example, the Tenants app has a bunch of monthly activities that include those three behaviors, among others. They do a monthly survey of the status of their home and their neighborhood, whether they're feeling safe in their neighborhood, or is there any rowdiness in their complex, whatever it may be. We start extracting this information that we surface to the landlord, and they can quickly judge that NPS score, as well as some softer results that give the landlord an idea of the risk. And the tenant then gets rewarded. They get access to, so first of all, they go up levels. There are 4 levels, and they get rewarded with great deals like discounts on prepaid electricity, discounts at grocery partners, at cleaning partners, and everything, security, anything that has to do with your rental. So how does a landlord get it right, or an agent? We do work a lot with estate agents as well, and with property managers. So the landlords and agents, first of all, get a flow profile. They then onboard their tenants and they turn them into ambassadors. And the one trick that I think, well, it's not a trick, but it is an absolute certain fact that we have learned. And from, Maurice mentioned my previous background, which was the ad tech company that I built when we became Facebook's biggest partner in Africa. So I got a good understanding of general social behavior on digital platforms. And one of the biggest learnings is that word of mouth is the most powerful method of growth. And it almost sounds obvious, but I think Nielsen had actually found that a referred friend is 4x more likely to buy from you, right? And that's where the second point here is that we help you turn your tenants into ambassadors. And through the same incentives within the app, they start referring other tenants to your portfolio, and they also rate and review you publicly, which definitely helps to attract new leads and high quality leads. And lastly, we tap into social media spend, call it the flow fuel, that actually fires the correct, well-targeted leads with your portfolio back into your environment to give you far higher quality, pre-assessed leads to help you fill in any vacancies. And the other opportunity with that is that on Flow, when you list your property to rent, because properties, the tenant experience comes packaged with deals and rewards that we put together, your listing actually in turn comes packaged with deals and rewards. So you can imagine that you've just taken your listing and you have added new features that you've never had. Like this listing comes with up to 50% of prepaid electricity for great tenants, and monthly vouchers at Dis-Chem and Sweep South, and etc. And of course, we've got great deals for even the moving part, like deals with a company called Dropper for moving trucks, and finance loans to help with deposits, and different partners that really set your listing apart and attract the right tenant. Of course, that tenant gets to unlock those rewards during his lease if he is a great tenant, and that's how we tie it all up. Now, we've also honed in on another learning that I've had in my career, which is that leads that come through are converted to a customer if you respond quicker, right? So the finding that I've had from the insurance industry, who are obviously very leads driven with their call centers, is that within the first 5 minutes, the chances of converting your lead decays exponentially, right? And you can see that by the graph on the right, that over time, the chance of converting dramatically decreases, which means you want to be responding to your leads. And the main fact that we've taken from there is that we've built a CRM and a leads management system, as well as a chat app that allows you as the agent or the landlord to receive leads to your listings and also to receive inquiries from your clients via this chat app. And of course, like I said earlier, generation rent chat. We all use WhatsApp, and we are not reinventing the wheel. We are just simply using the fact, allowing agents and landlords to respond as quickly as possible, to manage their leads as efficiently as possible, that will allow them to get a far higher quality tenant in. And with the new information age, of course, any tenant that uses this platform and has used it in the past especially has obviously built up their profile, their behavioral profile, where you can see what flow level they're on, and that quickly indicates to you a level of risk. So any lead that does come through to you for your vacant listing is already going to come pre-assessed with demographic information, affordability information, or where they work, how much they earn, even a previous landlord referral. But in the same way, that profile continues to be enhanced and incentivized during the lease, so that not only does Flow bring through a tenant that is higher quality and potentially better yielding, but we make it, Flow attempts to make it better yielding through incentivizing the general behaviors during the lease. So that's me. Let me pull out here. I hope you guys enjoyed it, and I hope you have some good questions.
Yeah, thanks so much for that. Tell me, where do you see prices going? Where are rentals going?
Yeah, so we also kind of dove into our data to try and understand that. What we predicted before lockdown came from level 4 to 3, when the real estate industry really came back alive, was that there's going to be a surge because people were locked up for about 3 months. Every month, about 10 to 12% of the rental industry moves, just generally because of an annual lease and the average duration of a lease. And now that you have 3 months of backlog of that. Secondly, because of the current situation, people work from home more, they need more space, and they also have potentially dropped in affordability. And because of that drop in affordability, they also want to move. What does that do to the pricing, in our opinion? So on the one hand, you may have the surge in demand, but on the other hand, we do believe that over the next few months, there will be pricing pressure. And that pricing pressure is really based on the data that we found, that affordability has dropped, that 78% of tenants are affected in terms of their income. And of course, that may mean that pricing is going to be under pressure. That's our view.
Have you, and the talk around ruralization, that people are going to start moving out of the cities. I saw on, it was either BBC or CNN, that Cleveland, in fact, is getting a surge. People are moving out of New York and Boston to Cleveland, right. And they believe this is going to be a trend. Do you have any views on that?
Yes, that is actually one of the factors that we believe will allow pricing that may have the reverse effect on pricing. So I do think that, our view is that the social engagement that we have and the commute that we may have to work, that's all changed. It's probably going to change for a while, and there's a better reason for someone to consider moving out of the center because commute is less necessary and people now need more space. And obviously space becomes more available as you go out of the center. And through that, the pricing of rentals is obviously less as you go out the center, which means people can afford to move out and have bigger space and no longer need to commute. I do believe that it will become a trend for that reason.
Because there's a lot of talk just around technology and the fact that these flying cars or drones, like the Volocopter. I don't know, have you heard of the Volocopter?
No, I haven't. I mean, I've heard of flying cars and companies like Uber investing heavily.
This over here has been developed. They've been doing this over, I think, 10 years now, and
I have come across this.
Yeah, I think they've gone live now in Dubai, and the autonomous and they can, I mean, the battery is not great, but at a certain point, you're going to be able to live in the Karoo and commute to work in Cape Town at the fraction of a cost of actually commuting from, let's say, Stellenbosch to Cape Town, because there's no driver and it's electric powered. So there was that pressure. You know what I did with my properties? I decided to, in fact, I'm going to use an example. I've got a friend who, at month of lockdown, tenants didn't pay. They had difficulty paying, and my mate went out there, drafted a whole lot of letters of demand, and decided to send them. What happened was very little. I took a different approach. I decided to actually get food vouchers, and I got these 300 Rand vouchers. And what I did is I sent them to my tenants saying, look, as opposed to remission and rental in these tough times, here's a food voucher so we can feed into an industry that's suffering. So it was a fast food voucher off Uber, and I gave it to all my tenants, and guess what? Every single one of them has been paying. And I think that's what you're saying. Now, does your platform
100%.
do that? I mean, I saw there was a market.
Yes.
How does that work?
Yes. So, I mean, you hit the nail on the head in terms of the data that we've uncovered here, is that goodwill, it's almost a carrot versus stick, right? So, the guy has probably lost his job, or has a 25% reduction on his income, and you coming in with a further stick. The guy is stressed and pressured, and his response is going to be a human response. Whereas our findings are that, and again, our findings are based on other industries like the medical industry, and momentum and multiply and vitality and discovery and retail with Pick and Pay and Smart Shopper, that those gestures of goodwill through a system that can automate it, which I'll answer your question now in terms of can the system do that, is exactly what we're working with in terms of driving the right behaviors, right? So a tenant's biggest expense is you. He has to pay you 30% of his income, which is now dramatically reduced. And you can either go in with a stick or a carrot. So yes, our platform does exactly that. You are able to, first of all, the off-the-shelf product does provide incentives to tenants for basic behaviors. So if you pay your rent, you unlock a reward, and that reward can be, we interchange it for vouchers at different retailers or whatever it may be. But a landlord is able to custom run a campaign to their tenants on the platform and incentivize any behavior.
That's
so
brilliant.
You can do that for renewal of a lease or whatever it may be.
Have you considered the fact that you can actually target certain sectors of the economy that are suffering with those rewards? So
I mean, we haven't done anything that specific, but we've got that capability. So we're working, a lot of our clients are the larger institutional landlords. These are guys that have, 10, 15,000 units. So they do have a good representation of a market of all different levels and sectors. And with them, we do work on those types of initiatives of how do we target, the lower income of their portfolio versus the higher income of their portfolio. And it is curated for considering what that demographic is in their portfolio.
Where do you find, what segment of the market's taking the most strain according to your data?
Our data actually shows that everyone has taken strain.
So even the 5,000 Rand a month, because I thought those wouldn't be under pressure, but that's your entry level.
Yes, they less so, but they are. So the middle market is taking most of the strain. The lower end of the market is also taking strain. I mean, there are cuts left, right, and center. And I mean, consider that we ran this in May when we were in hard lockdown. We've just recently ran a new findings now. I don't have the results yet, but I do believe there's going to be a change in the results. And we're going to keep doing a dipstick approach into this over time and just watch how the indices change.
But what actually happens, because people have to live somewhere, so and they're not buying. So if they're not buying, is it just a case of them living at home, staying at home longer? Is it rather a case of they're being tenants and they're occupying and they're not paying rentals, or are there vacancies? What are the vacancies like?
I don't think there's going to be more vacancies than there were. I think there's just going to be a movement. There is going to be a further surge of stock into the market, though. So, for example, Airbnb has taken a major knock, and Airbnb have about 50,000 units on the market in South Africa that is now has to move towards long-term rentals. So all of a sudden, over and above the increasing developments that have happened in the past few years, you have an additional 50,000 units on the market. So supply has certainly gone up. So vacancies will probably go up, but because of that reason. But like you say, this is a basic human need, and people will always live somewhere, and that's where pricing pressure may come in. So they will have to renegotiate, and landlords will have to fill up their vacancy, and they will have to reconfigure and adjust. Even having a reprieve from the banks and the interest rates is going to lower the price, but people are going to move around. They may move out of an expensive apartment. They may move out because they need more room to work with at home, but they are not going to be more homeless people, or majorly there's not going to be, half the population is not going to go homeless because of this, or half the formal rental sector in this country is not going to go homeless. They are going to just be movements.
Yeah, no, sure. And what are your views on interest rates? I mean, the low interest rate environment could spark, an increase in sales, but people do not have money. So have you thought through that dilemma?
Not enough, but if I refer back to like the principles by which we're building this, I think that and those principles are affordability and lifestyle. I do believe that in any situation, people are going to be renting more and more. That generation rent trend is going to continue to grow. Has COVID-19 accelerated or decelerated that? Perhaps to a point, but I do think that those that move from renting into the buyer's market, the first-time buyers, perhaps do have more of an opportunity now, but it probably goes hand in hand of their salary reduction and any other reductions that are happening because of this. So I don't think there's going to be a major acceleration of buying. I think there's just going to be kind of a left and right movement of the same.
Yeah, I hear you. And another thought I had is that because of the lockdown, the apartments, that market is actually going to get out of strain, because people now realize that a lockdown is a very real prospect, and you don't want to be in a 50 square meter apartment when you can afford a freestanding home in a suburb. Have you given that any thought?
That's where your concept of the what's it called, the Veloraptor,
Velocopter.
Velocopter, Veloraptor. That's where, as much as there may be pricing pressure, people do want to move to a place. Let's put it this way: the lockdown has created a new normal in terms of remote working from home where it's possible, schooling from home, and there is a whole new need and a whole new notion and concept of what your home is and what it is that you do at home. It's almost like during the week, everyone leaves their home. The kids, the parents, they leave their home to go work, and they come back after 5, 6 to have dinner and go to sleep. That's changed. And I don't think it's going to get back to what it was too quickly. And therefore, the space consideration will change. And of course, there will be the sideways movement. It's almost like Johannesburg has always been built for it, although Johannesburg is probably the strangest city in terms of its city planning, because it keeps getting built out as opposed to up. And it's natural for this, but I think most cities, although geographically they're constrained because there may be a mountain behind you and a sea in front of you, like Cape Town, there will be movements sideways where people now consider where they live in a very, very different way.
Yeah, before the lockdown, I stayed right next to an apartment block in Morningside, Sandton. And before the lockdown, you'd see 80% of the lights on. Everybody moved out just before the lockdown, because we're only about 20%, if not less than that. So everybody before the lockdown decided to move out from their homes. Now, that's quite a bitter pill to swallow if you think about it. It's your home, you've spent all this money, and now you've got to move out because you don't regard it as comfortable enough. But I have been hearing a lot of people saying that they love their homes now, and that they I certainly am. I'm far more invested in my home than I was because I spend so much time here.
Yeah, and I think the piece that a landlord should consider in terms of this insight is there's certainly a soft relationship between your tenant and his home, and you providing him his home, and that you have an opportunity to give him that, that's where that emotional sort of attachment may come in. And more now than ever is that relationship between a landlord and a tenant important, where a landlord can enable that for the tenant, right? So so again, like almost back to the learnings, there's going to be tremendous supply out there. There's going to be pricing pressure from the tenant, and a tenant may want to consider moving if he's not emotionally attached to his place. And if you do have a good tenant, you probably want to do everything you can to keep him. And considering what you're saying, Maurice, is that this is the tenant's home. It's his sanctuary. If you can help enable that as a landlord, that's where a lot more goodwill can come in. That's certainly something a landlord must consider in his portfolio, as opposed to a far more clinical approach.
Yeah, I totally agree with that. There's, I don't know if you read Freakonomics or Super Freakonomics.
Yes, I have.
In there's a chapter that deals with doctors and how they did an analysis on the frequency that doctors were sued. And they found that doctors with a bad bedside manner will be sued far more often than nice doctors. So it was only the doctors that were hard and were idiots and they were tough. They'd get sued, but not the nice guys. It's difficult to not pay rent to somebody who you really like, who really goes out of their way. Whereas it's very, very easy if the guy's going to be unreasonable. It's easy to not pay your rent. It's that much easier because you don't like the person. Yeah. It's actually an emotional response that you're actually triggering. Do you want to go into like the evolutionary irrational brain where the person just sees red? Why? Because you've threatened to sue? Or does one go into the softer, more accommodating brain where one wants to try and make a plan?
That's where we've underpinned everything through the behavioral economics. Behavioral economics is the correlation between what you're saying, that emotional, human nature response to your bricks and mortar, ultimately.
And how do you do that through the app?
So that's, so the tenant uses the app every month. It automatically communicates with them and encourages them to pay their rent. And every single activity in the app, so the rent payment happens on the app. We've got an integration using Ozo, who's an EFT technology. We've got quite a unique integration with them where the tenant submits the banking details of the landlord or the agent, and he does an EFT via the app. It's almost like a one-click. So it's not only do you get a reward, but it's actually far more convenient than jumping into your internet banking to do the EFT. But the minute you do it, the minute the transaction is complete, and through this integration, we obviously have a confirmation from the bank that the funds have been deposited to the landlord, we unlock a reward. So there's a rewards tab in the app with, say, 150 Rand discount voucher, and there's a little lock on it. But once you pay your rent, that lock disappears and you get your voucher. So it's as simple as that.
That sounds absolutely brilliant. As a landlord, what do I do? I mean, you've been talking a lot from a tenant perspective. How do I get on it? How do I find this?
So you go to flow.rent and you click on register, and you register as a landlord, and you start doing two things. One, you upload your existing tenants. The system automatically invites them and starts explaining what the benefits are, and then it obviously relates you as the landlord. So it says, Maurice would like you to join Flow to pay a rent because it's going to give you a lot more rewards for being a great tenant. So it automatically creates that goodwill link. The tenant logs on and starts using the app quite autonomously. And secondly, as a landlord, you also upload your vacant listings and it goes onto our search portal, which we've taken the whole notion of this behavioral economics and tied it into the listing. And the listing itself shows the benefits that a tenant can unlock during their lease. So it's far more attractive for the prospective tenants. But that piece of it, we've also leveraged social media quite significantly in driving the right targeting for the right leads. So when you work with us on a vacant property, especially with a bigger portfolio, we actually leverage your existing marketing spend. And through an API integration with Facebook's and Google, we actually we integrate. You can imagine we integrate those rewards into the actual advertising that brings through the leads to you, right? So yeah, I mean, again, to summarize, flow.rent, register, start there, and you can even chat to us via your login.
Lastly, so we talk about COBRA being all about business rescue and assisting businesses. What we do have is a team of mediators who negotiate with creditors. And I'm just actually thinking that it would actually be quite cool if if a tenant wasn't able to pay or was struggling to pay, you actually just get a COBRA mediator. You have a little COBRA tab and you get the COBRA mediator on board to try and make strike an arrangement with the landlord. And if the landlord has a problem with the bank, then we try and strike an arrangement between the landlord and the bank, and we do it right down the line. How easy would that be to include in your checks?
Yeah, we called it the landlord marketplace, where we've got different partners, and it's exactly how you describe. We provide access to the landlords and the agents on the platform to these partners, exactly like COBRA. So I mean, we're already in talks with you guys at Schindler's on offering some of your services to our landlords. I mean, it makes perfect sense, and we've kind of curated a far more accessible deals for landlords that become a good source of quality leads to Schindler's, but in turn a great deal back to the landlord. So exactly what you're saying is possible. It's built for it. Oh
yeah, no, we'd be very, very keen to give back. I mean, it sounds like an absolutely brilliant platform. That's great. Okay, I don't know if there are any other questions.
I think I see a question here in the chat about considering our platform for commercial leasing, which I can help answer quickly. So we've gone to market with a focus on residential leasing. We probably intend on diversifying it out into both commercial and retail, and potentially even sales to a point. But we've had to focus to get the cookie cutter right, the mold, and the short answer is that we will probably branch into it, but you just need to consider that the behavioral economics in commercial is slightly different. So who is it that you incentivize? You're the financial officer of your commercial tenant, or the CEO, or is the person who signed the lease? And so those are the dynamics that we need to consider. Whereas in residential, the leaseholder is a guy that lives in your property generally, and so we will solve it, and we will move there.
How does your pricing work? Who pays?
So the landlord pays. The landlord pays a monthly fee to activate this for their tenants, to provide these rewards and these incentives to their tenants. It's a fee per tenant on a small scale, but once we deal with bigger portfolios, there are economies of scale there. And we also then, there's also the acquisition of tenants for your vacancies. That's all driven also by a similar monthly license fee on the platform, as well as managing your media budget to drive the leads to you via your flow profile and attract better ones at a more cost-effective rate. So it's a monthly license plus any media that you want to run on top of it.
Brilliant. Okay, so we're gonna. There's another question here. What about services other than movers, plumbers, electricians? I may have missed this part of the conversation. I think that's part of the rewards. What else can add?
So it really is the world's our oyster when it comes to that. I mean, you know, what we've realized is that your rent is so pivotal in your life that the whole marketplace around where you live is where you spend the rest of your money. You know, most of the rest of your money. So if 30% of your income goes to rent, a big chunk of everything else goes to anything related to your rent, right? So it's your entertainment, your fiber, your cleaning, your groceries, right? So, and that's where any partner that is related and relevant to rent is someone that we want to speak to bring them on board. Right? So it's not only services like plumbers and electricians, but it's deals with the networks that we are striking. It's deals with we're actually opening up a shop of groceries, and we're going to be providing discounts in our shop. But we currently have great deals with one cart for grocery delivery, with sweeps out for cleaning. So it really is open to anything related to your rent.
Well, we're definitely going to get a COBRA. COBRA must integrate, because if there is a problem, if there's going to be a dispute, you're going to have to mediate that dispute in any event. Do you know the changes in our law with Rule 41A? Have you heard about it? So if you sue now out of the High Court, there's a rule that's been introduced where prior to suing, or when you sue, you have to invite a mediation. And if the tenant, in this case, refuses a mediation, or the landlord refuses to mediate, then there are cost implications in court. So mediation, if there's a default, mediation is a prerequisite to actually collecting. So I mean, you're engaging Schindler's, but what we'll also do is put a COBRA tab there, because it would be a great portal to the pro bono mediation component of the COBRA offering. I don't know. Do you think?
Yeah, got you. No, it makes 100%. That's exactly what we want to achieve.
It's actually something. I mean, you're going to require it because of the new change in law. It's a feature that ought to be integrated in any type of app dealing with rentals. I mean, mediation is a given. You know, we were going on a carrot or a stick. Mediation is the way to resolve disputes.
I got you. Again, I mean, the intention for us is to build a platform where we bring on expertise. We certainly are no experts in it, but we partner with the best in its class to bring that through. So it just makes perfect sense.
Hence you're partnering with Schindler's Attorneys.
Exactly.
I mean,
right.
I just want to ask you. You know, we've been dealing with residential, but you're in the property game, commercial property pricing pressures. And importantly, what do you think the pivoting will be in commercial when it comes to commercial property? Will it pivot to residential? What are your thoughts there?
You know, as far as we see, I mean, the pressures there are far more severe than residential. And basically, it's because, you know, you're still living in your home, so you should be paying rent when you can. But a lot of businesses are feeling that, well, we're not trading, so why should we pay rent? And those dynamics are different. So, one factor that I've seen is that there will be an evolution, a pivot of sorts. Some businesses are going to require more space. So think of a call center. You can't have the guys on top of each other anymore. You know, you're going to have, and then again, it's not going to be for the short term. You're going to have to rethink the space of your operation because of what's going on for the next several years, which means you are going to require more space. So there's going to be some businesses that need more space and will pay more. There's going to be some businesses that have realized that the dynamics of remote working works for them, and they're going to reduce their space requirement. I actually had a chat with the guys at WeWork, who obviously also took a knock at this time, but the trend that they're seeing globally is that the big businesses like the Googles and the Facebooks are actually now, they have, I mean, you may have seen Mark Zuckerberg as well as, Twitter saying, we have now taken on a permanent policy where you can choose as an employee to work from home. And before, they obviously almost mandated you to come into their campus, which was a concentration, which is just an absolute, disaster waiting to happen when it comes to the pandemic. But to cater for it, they've gone and done global lease deals with WeWork. And so it allows their workforce, which is a good 50, 60,000 engineering team strong, to work remotely, but also jump into an office wherever they are in the city. So there's an evolution for even the shared office environments where they have definitely lost a lot of business, but they are gaining business because of that pivot, like you say. So that, again, I think movement sideways. Retail is going to be very different. Restaurants and shopping, that's already, there's been a massive decline in that before COVID, because of the because of the movement of online buying. But that's where we are seeing a major leapfrog effect. A leapfrog effect, obviously, meaning that there's almost a bypass of the slow evolution, and it's been accelerated to people now shopping online, right? So there's globally, about 5% of commerce happens online, and that it took 20, 30 years to get there. In South Africa, it's been less than 1%. I wouldn't be surprised that it's caught up to the 5%, although our demographics very different, being a third world country with a far more disparate income profile. But there's absolutely been an acceleration to people shopping online. A lot more innovation happening when it comes to the experiential part of shopping online and going and feeling that, your shirt that you want to try out, that's being innovated on. And so retail is going to continue on some sort of probably decline, but there will be a pivot, like we say, when it comes to the call center businesses and to the WeWorks and the shared office environments and so on.
Yeah, a lot of nuances. For instance, I don't think many people have considered this, but when it comes to tax, the primary rebate on capital gains tax when you sell your residential property. Now that you're working from home, is it strictly all residential? What happens to that?
Good question. Yeah.
I'd
imagine the tax laws are going to have to adjust.
Yeah. And something else I read, which is really interesting, which is going to have a huge impact, is they're now seeing, there's a movement that regards working from home as a new human right. Have you come across that?
I haven't. Yeah. But that makes sense.
It does make sense. It's your right to work from home if there's no prejudice to the business. And in fact, if there's only a benefit, if you heard what Twitter has to say, they say efficiencies have gone up. Microsoft have said efficiencies have gone up. So if there's
no business,
why put yourself at risk? So it may very well be a human right.
Right. Yeah. I totally agree with that. Totally agree.
Okay, brilliant. I think that's about a wrap. I don't see any other questions. Thanks so much. Thanks to the attendees.
Yeah.
Thanks to you. This was really, really informative. I'm going to go straight on.
Good. Thanks for having me.
What's the website? It's www.
Flow.rent.
Flow.rent. .co.za
Yeah.
or .rent?
No, .rent.
.rent. Brilliant. Okay, well, I'm going to sign up now. Watch out for that.
Good.
So, thanks to you, the panelists, and thanks to the attendees. Please join us tomorrow. We have another webinar at 10 o'clock. Remember, we have these daily webinars. And if you need any assistance, please go onto our website, www.org.za, or just send us an email at info@cobra.org.za. Thanks to attendees once again, and thanks to the panelists. Until tomorrow, bye-bye.